Subscribe to our channel and press the bell icon to never miss an update.
In today's version of things that I should have known because I went to a B school but I don't, we are going to cover something on investment banking. Hello, sir. Nice to have you here. One of the things that you focus on is the impact of data on financial decisions in the finance sector, specifically in investment banking, where the implication of every big decision is so massive. So, I wanted to know a little bit to begin with from you about what is the importance of data today in the financial sector overall and within investment banking specifically?
See, data is a very raw term. A more sophisticated term would be information. From data you get information if you treat it in the proper manner. And this information which helps you take decisions which could have a competitive advantage to your organization or could be destructive to your this thing. So data is very important. It's the input to any kind of data analytics from which you get information, from which you convert it into good decision making.
Now there are times when BCom students finish their BCom and come to the MBA campus and they are at sea in finance subjects because there's just so much technology into the finance space. How has this transition happened? What are some of its manifestations that you see in the industry?
Yeah, well, the transition has mainly happened because, see, in the 70s and 80s, finance was primarily accounting. So that's why engineers would feel very uncomfortable and the commerce graduates would feel at home.
Right.
But over time, people have begun to see a new kind of subject has emerged. It's called financial engineering.
Right.
Which means applying engineering principles and mathematics in the field of finance. And naturally, to get the best out of it, you need a lot of technology and a lot of data. And this is why engineers today feel at home in finance.
Right.
While BComs and those with the commerce graduates or non-engineers are struggling to find their foothold.
How is it that the BCom grads, for example, or grads who have not learned coding, even within engineering, there are guys who have not learned coding, right? So, how do they overcome that shortcoming in today's market realities?
Well, let me start by making a very prophetic statement. I'm not an engineer.
Right.
Yet I dabble with R, with Python and VBA at ease.
Right.
I think what is required is you have to keep away that fear that, oh no, it's coding, only engineers can do it. I don't think so. It can be done. Number one, you have to be structured and you have to have an attitude that I want to learn.
R and Python is something that is a very important part of the course structure here. What can students expect to be working on within investment banking, for example, after having learned R and Python in a BFSI course?
Once you learned R and Python, it's not just learning R and Python, you also have to learn the application part of it.
Of course.
For example, let's say you're in JP Morgan and you have to prepare a client meeting where the client is going to request a very big loan.
Right.
You have to structure it. Yesteryears, this would have taken maybe 2 or 3 days, but right now if the client says usually the client say I want it yesterday.
Right.
So you have to be prepared to do such a thing within 2 to 3 hours. This is why your coding experience could help you go through shifting through this massive amount of data of the client's business and immediately telling him, should he take a floating rate loan or should he take a fixed rate loan? Should he take a long tenure loan because of his industry's cyclical nature?
Right.
Or should he take a short period loan? So this kind of help.
Investment banking is huge on campuses. All the B school students want to become investment bankers because 1, the money is great. 2, the lifestyle is amazing. 3, you get to do really smart work because it's maybe 0.001% of the world who are able to do that kind of work. How do you think this particular job is going to evolve in this world where technology is going to do a lot of work for it?
There is both a plus side and a minus side. I'll start with the minus side. We're going to see certain jobs being
wiped out.
Because these jobs are mainly operational in nature, repetitive, and anything that's repetitive, a computer can do it much fast with lesser errors.
Right.
So these kind of very mundane type jobs like cleaning the data or going through lots of background historical data, this can be done by computers. You're not going to need any human.
Just program is going to.
I'll give you an example from my experience in Tata Steel. When I joined Tata Steel in 1996, we had there were 72,000 people on roll and Tata Steel, and I remember in the marketing department, there was one computer and 7 assistants. When I left Tata Steel in 2005, the headcount was 32,000, and each of us had a laptop, and there was nobody reporting to us.
Right.
So I look at this next generation of jobs in the investment bank, it's going to be more of a, I wouldn't say siloistic, but it's going to be more of a very, like a small village type. You don't have to really come to the office and work, because today internet connectivity is everywhere. All you need is, as I said, a laptop, download R and Python, fix it up, get connectivity to the company. You can sit at home and create your own trading strategies, create your risk management strategies, and do the next bit of work.
So last question, and this is related to GIM's BFSI program. How do you think that equips students overall, beyond R and Python, beyond even your areas that you are covering, to be a little bit better than, say, any normal regular student coming out from a regular B school?
If you go to any average Indian B school, you find there's only one course in finance. It's called Derivatives and Risk Management.
Right.
Which gives you the feeling that derivatives are only meant for risk management. Now, I'm a financial risk manager, fully certified FRM from US. So when I came to GIM, I immediately bifurcated the course. I said, no, derivatives is not meant for risk management. Yes, they do have a role of hedging, but you can use derivatives for speculating.
Correct.
And I bifurcated, created a separate course called Financial Risk Management. Very few Indian business schools have it. And when I wanted to introduce it, I was given an open hand. So, Kaushik, please do it. I think we were the first few business schools in India. I think even IIM Calcutta and IIM Ahmedabad has it, where students were, for the first time, they were exposed to what are the different types of risk. Like if you buy a mutual fund, you'll see a brilliant caption: all mutual funds are subject to market risks. What is market risk? This is what the students were taught.
Right.
So they were taught, like, what is the difference between what's a market risk, what's an equity risk, what's an FX risk, what's a interest rate risk, what is a operational risk, how these intermingle together and can create havoc at times.
Right.
All of these exposures were given to the students. So this is the beauty of GIM, is it gives us faculty a lot of freedom to look at the industry and accordingly tailor our courses, so we equip our students with the latest of what's happening in the industry and the necessary skills.
All right. Okay, thanks a lot, sir, for doing this. I think that was very enlightening for me. The new frontiers in investment banking sound really exciting. Really appreciate you doing this for us. Thank you. Back when I was in college, I took up accountancy. I wanted to do chartered accountancy at that time, and that's when I got introduced to this subject which has given me nightmares. It's called financial accounting, cost accounting, something that you, sir, are a master at and you handle here at GIM. I'm in equal parts a little scared and a little excited about talking to you, sir, about accountancy. Please forgive me if my concepts are completely off when I talk about a few things. So to begin with, what are some of the things that you handle here? What are some of the subjects that you teach here at Goa Institute of Management?
I look after finance and accounting, where we teach the preliminary information about accounting, just the basics. And this is for all those students who are basically coming from a technical background, so engineers. And to them, teaching accountancy is quite a big challenge.
Right.
And I also teach cost accounting, which is for the second year, that is the second term. And I also have project management.
Sir, can you elaborate a little bit more on what are the specific challenges and what are some of the benefits of teaching accountancy to engineers?
See, one of the biggest advantage here is that they come with zero knowledge, and that actually helps us to start off the foundation, and it makes it easier for me to teach, because I know the way I can structure it so that they can understand it the fastest.
What do you think is the broad scope of project management? What are the areas that you touch upon within project management?
So project management is actually composed of two parts. One is how do you manage a project, which is the nitty-gritties of it, and then you have the project appraisal. Now the project appraisal is where the finance information or the finance knowledge comes in.
Right.
You have to look at how you are going to project how the particular, let's say, entity is going to do 5 years from now, and present that to your potential investor, let's say to a bank whom you're going for a financing loan.
So one of the most exciting areas of interest right now, students want to get into it, big companies want to fund them, The government is obsessed with them. The whole world is talking about them. There are websites and everything around that, which is the startup space.
True.
In that also, project financing, valuations, these play a very important role. So can you tell me how that plays out in the startup world?
Okay, the startup world is very different, very unique in the sense when they go in for funding. Generally, they start off with a little bit of funds from their own side, and then there is a stage-by-stage investment which happens from different investors. Some are short-term investors who are like your angel investors, and then you have the VCs, which are the venture capitalists, and then you go in for a long-term investment. The classic example here would be Flipkart. They started off as a very small unit, selling books. And at that stage, they were looking for only angel investors who came in to fund their particular organization. But as they grew, they found that these angel investors were not able to provide them the necessary funding. So then they had to move on to the next stage, which was the venture capitalists. Now, the venture capitalists could be somebody like SoftBank, which came into for some big chunk of funding in lieu of the equity that was given to them by Flipkart. But overall, that was not the long-term interest of SoftBank. And finally, if you see, SoftBank actually sold off to Walmart, and Walmart took a major chunk of the equity of Flipkart.
So the other area where there is massive amounts of spending happening, and often the jurisprudence around spending money has been questioned, and it's often wondered if it is done properly. There's a lot of corruption around it also often, is the public space, right? Like a lot of public spending happens. Now, some big projects need a lot of very good understanding of finance and how to structure raising money for it. So can you give me an example of a public project and how that may have been funded and built?
Yeah, so if you look at, there was a classic example of when they wanted to extend the metro to the airport, which was the airport line in Delhi.
Right, and the airport metro.
Yeah, airport metro. And this was a space where they needed to look for how they're going to fund this additional expansion of the Delhi metro. And here they had different models. You can have a PPO model where you go and combine together with a private player. So you have a public-private participation. So it's a PPP where both of the entities come together. Part of the funding comes from the government, part of the funding comes from the private player, and then you share into whatever is the revenue which is coming in or the profits which are coming in from this particular project.
There is also a debate around, a lot of times the debate comes down to debt versus equity as well, right? It's whether you want to take up a loan and do this from a bank and pay interest, or you want to take up a share, give up a share in a business to someone else. So what are the pros and cons of those kinds of decisions?
Now, if you look at from the company point of view, if I have to go in for debt.
If Flipkart, for example.
Let's say Flipkart. Now, Flipkart always chose the route from getting money from the investors. So, which means they were giving a part of their equity to an investor who was pumping in money into this enterprise. But if you are going to go to, let's say, a bank and trying to get some loan from them, that means you are locking in a part of your income which is going to be paid to them in the form of interest, which is going to impact your bottom line. And very often these startup companies are always short of cash. So it's very difficult for them to take out another amount of money and give it to the bank as a form of, or any financial institution in the form of interest.
What is the importance of your subjects in the BFSI course? How does it help students become better managers in the BFSI industry?
So BFSI, if you look at the focus here is on the banking and financial services and insurance. Now banking, the core revenue for them is when they give out loans. Now when you're giving out loans, you need to first understand what is that company who's coming to you asking for loans. You need to analyze that particular company, and that's where the entire accounting and finance comes into it. So unless the person is familiar with accounting, he will not be able to look at a balance sheet or a profit and loss statement and analyze it and say, yes, this is a long-term investment that the bank can do it.
What do you think is the hallmark of a good professional in the BFSI industry? You've been sending a lot of students into the industry as well. So what do you think some of the things that students should definitely have if they want to do well at the BFSI industry?
So the important thing now is BFSI is moving fast. I mean, there's a lot of technology changes which are happening in this particular space, and it's very important that students who are going from this institute are aware about these changes. There's a lot of fintech happening, there's a lot of technology changes which are happening to a consumer. So the consumer is no longer required to go to a bank. The bank is in fact actually coming to the consumer in the form of his hand phone.
There is finance and fintech today, and very soon it's all going to be finance, with fintech not being a different thing but just the way of doing finance.
True.
All right. Thank you so much, sir. Thank you so much for doing
My
this.
pleasure. Thank you.
Really appreciate it.